Afternoon. How are we all doing? Hopefully the stream works this afternoon. Didn't work very well yesterday. How are we doing? Afternoon, Reverend Bogdan, Steve, Callum, Jurch, Monkey, Van, Danny, Fletch, Brian, Mumo, Eri. How are we doing? Paul, Mark, and Firechrist. How are we? All good, I hope. Get the news up. Tuesday afternoon, we're going to trade the New York Open, see what the indices do. Something very wrong with the S&P at the moment. It doesn't seem to be ticking very well. I don't know if it's my broker or what, but this is not really ticking. No, it is ticking, yeah. Took ages for the data to load in here because the data loads on tick. And it didn't load for ages for some reason when I launched the platform. But anyway, come back to that in a minute. Right. So we're going to have a look at FX quickly before we go into the New York and the news. So today we've got no news again. We got Powell testifying at 3 o'clock this afternoon. That's it. So there's no forecast or rather scheduled news coming this afternoon. We got Yellen speaking at the same time as well. So we'll see what comes out of Powell during his testification, if it's even a word. And then again, testifying further tomorrow. So we're looking for forward guidance from the US as to what we're going to be doing with interest rates. Forecasts are there might be a couple of interest rates coming, drops, but we will see. So that's the main news this afternoon. The market might hang around a bit this afternoon. We'll have to just wait and see what the open's like, but it may well hang around and see if Powell says anything exciting. But that's all news we've got today. The big news, first big news event this week is New Zealand dollar interest rates tomorrow morning. 5.5 forecast, staying the same. There is a slight chance we might uptick to 5.75, but probably unlikely. So I think 5.5 is what we'll get. Likelihood is that will be bullish New Zealand dollar. So we'll wait and see what happens with that, but nothing we can do. And it's all happening overnight. Then we got Powell testifying tomorrow afternoon again, and that's it. So it's really literally Powell, and a bit of New Zealand in the middle for the next 2 days. So we'll see what happens with those. From a financial juice feed perspective, not seeing a soft landing for growth as growth is below potential for the ECB. So looking for GDP to be dropping a little. So slightly negative euro, but not a lot. Apart from that, there wasn't really much else overnight. For news, Bank of Japan, Suzuki talking a little bit, and Ueda, I think it was. No, but not Ueda. Who else was it? I don't know. Someone else was talking as well. But US dollar and yen basically on hold at the moment. So there's not a lot really coming out of the Bank of Japan to do with intervention or anything either overnight. So usual stuff. So nothing else exciting overnight. So no news today, no news yesterday, no news overnight. No news. So not really done a lot. No ADRs. Nothing's moving. Basically, no ADRs today. So far, nothing's hit its weekly range. We're only on Tuesday, but nothing's hit weeklies yet either. So yeah, flicking through stuff. Very, very, very quiet. Everything's sideways at the minute. So we got a lot of US news, as you can see. We've been totally sideways 4 days on that one. Got a lot of US news coming up this week. So there will be some movement, but as you can see at the moment, Euro-Odd kind of painting the picture. Just we're not going anywhere. Nothing's really moving. So Euro basically did the gap fill yesterday. Nothing else much from the Euro. Pound hasn't really moved much at all. Euro US dollar totally sideways. Pound, we're stuck in a 5-day plus range. Little bit of movement on the pound CAD last week, but this week so far nothing. So that's Monday, obviously sideways. So yeah, nothing's moving. Dead. It's almost like summer trading has arrived already. Far too early, but it's just dead. So as you can see, we've got literally nothing has moved. Got out of pound New Zealand yesterday evening, so took that one off. Looking for a propulsion gap test, and we were very close to propulsion gap before end of day, so I decided to bank that one, which was a tiny profit because I did take a little bit of drawdown control on something yesterday. Did DD control on pound CAD. So took some of that pound CAD off, which brought the average up ever so slightly, sitting around about average on that, looking for a target in propulsion. So slight profit yesterday, but nothing much. There's quite a lot to bank at the moment, but I'm just holding stuff because we're not going anywhere. So I'm just waiting to see what happens with the New Zealand, the US dollar news this afternoon. But yeah, just flicking through, you can see literally, I mean, it's absolutely flatline everywhere. So US dollar yen holding at the moment. So the reversal that we had is holding. They're holding support at the moment. So we are still making ever so slightly lower highs. And we are in a descending wedge, which at the moment is bearish. But obviously Powell could do that or that in the next hour. So we'll see what happens. RSI's totally flat. Nothing. So totally dead. It's going to be a short stream today. It's just nothing moving, nothing to look at, no signals, no conditions met. So I wouldn't be surprised if all three indices hedge as well, because there's just so little volume. Look at the US indices today. Yeah, they just, you know, we have gone nowhere in the Globex session at all. We are just, it's almost as if they've not bothered to open the banks today. Steve, mine is the same, S&P. Yeah, it's just, it's hardly ticking, and it's gapping as well. Yeah, you can tell when there's no liquidity in the market. Look, we're gapping. So from close to open of candles on 5-minute chart, we are actually gapping. Look, we gapped down, closed there, gapped up, closed down, gapped up, gapped up. Yeah, we've got a gap to fill. We've got another gap to fill. It's just there is zero liquidity in the market. So we're having to gap to fill orders. It's awful. So I'm hoping we might get some volume coming in at the open. But at the minute, this thing's dead as a doornail. Afternoon, Virginia, Roswitha, Florian, XO Update News, Alan, Abdi, afternoon. So yeah, if there's any FX pairs you want to look at, let me know. There's very little to look at. So I'm happy to have a look at any FX pairs, but at the moment, we're waiting for, it seems, Powell at 3 o'clock. Afternoon, James. So we've got 2 minutes to the open. I'm out of stuff to say already. Look, this is how crap it is at the moment. There is no news scheduled. There is no news released. There is no movement in Forex, and the indices are dead. There are no RSI extensions. There are no ADR extensions. I have nothing to say. I don't know what to say. It's crap. I might bank some of this just to bank stuff because I can. I don't want to, but the only thing I'm in drawdown at the moment on is US dollar yen. Obviously, the one thing I shouldn't be in. But yeah, it's terrible. Absolutely terrible. Look at this market yesterday. Look, this is what no news days does. Just shocking. Trying to take this month off. Not working very well. No, nothing much. Indices are working well this month. Well, they have been anyway. Good breaks on the indices, but we'll see what happens. Look at that gap. See, Nasdaq's gapped up. Look. Just had a gap up on the NASDAQ. Bit of volume coming in pre-market. So bit worried about slippage today and spreads. I think we might get some big spreads, but we'll see. What's your view on position trading fewer pairs, say 2 to 3 with larger stakes over trading all pairs with tiny stakes? Up to you. 2 to 3 pairs is not going to give you an, well, if you take the first 2 to 3 pairs that come along, yes. So 20 seconds to the open. So, yeah, I mean, basically, you can't just pick 2 or 3 pairs to trade. You need to trade what's moving. So wait for something to get extended, trade it, and then don't take any more trades on that instrument, that currency. Okay, there we go. What the hell happened there? Wow. Okay, so Dow range is pre-market short. Nasdaq's too small. S&P is too small. I'm not surprised at all, to be honest. But so we'll see if we can get a decent size at the opening range. We need 127 opening range on the Nasdaq. We need 27 on the S&P to get a trade on. Dow's broken nicely to the downside. So yeah, you can do that. Obviously, the danger of trading one instrument or 2 or 3 instruments only is if all 3 of those get stuck, i.e. one of them goes into a squeeze, the other 2 go into ranges, and you can't get out of any positions, you're not going to make any money. So there's a lot of luck involved in everything, obviously, but yeah, you can go in big stakes on lower pairs, on less pairs. If you just limited your exposure to one, so Aussie short, that's it. No more Aussie. Yeah. Yen long, that's it. No more yen. So you could do that. So just take one currency in one direction, and that's it. So that you've got one exposure on each currency. And trade 1, 2, 3, 4, 5, 6, 7. Oh, I'd get rid of that. And obviously you've got the Swiss franc in there as well. Try that. Don't know, never tried it, so can't really say whether it'll be effective or not. Put a portfolio, do some back tests and put a portfolio together and see what happens. It's just about 27 range on the S&P. We need 39. Sorry, minimum range is 230, 23 pips on the Dow at Nasdaq. And minimum range is 4 on the S&P. We're not going to get it today, I don't think. Nasdaq currently sitting at 190. We might get a range on the Nas. Yeah, looks like it. There we go. You need a little bit more than that. There we go. So there's going to be an opening range break on the Nas. S&P not going to trade today. Dow stuck. Dow's come off yesterday's low. Look, we had a double bottom yesterday's low. They've just rebought that. So that looks like it might hedge. Okay, Nasdaq, we've got 31. That's plenty. So try and get a break on the Nasdaq. Loads of room on that, look. So we've just taken out the high of Globex, which is here. So we've got loads of room to run upside and downside to ADR today. Plenty of room. Seems like the Japanese have completely given up on the idea of intervention. Seems like it at the moment. Afternoon, George. Nothing is moving. I did not Fed Powell was the smart money. What that means? Let's talk RSI 2. When's your Powell's EA coming out? Don't know. It's up to him. While he's got to build a website yet. It's not his business, so he's not in a rush. Put it that way. Still stuck in Aussie New Zealand for 2 weeks. Done 2 lots of drawdown. We'll have a look at that. Let's just wait for this candle to close. We've got 30 seconds for this Nasdaq to close. S&P range Oh, the S&P range is now okay, so we'll get a trade on the S&P as well. Well, that NASDAQ might even go too far, look. Look at that. Okay, pre-market range is in on the NASDAQ, so I'm going to take a break of the opening range there, and the same with the S&P. I hate it when it closes strong like this because usually we get a little bit of a retracement, but we'll see. S&P is trying to break long. Struggling. Hopefully it's not one of those days where they've basically, that's it, they've done it. All over, that's it. So you just get the whole session. I think we might be waiting for Powell. Got 25 minutes until Powell speaks. So Aussie New Zealand. So we've just taken out last week's high. It looks like they're selling it pretty hard at the moment. You've got a reversal alert on the Aussie New Zealand just kicked in this morning at those highs. So tomorrow morning, obviously, New Zealand dollar interest rates are announced. So the current sort of pattern that we seem to be in at the moment is no change on the interest rates, massive bull run. No change on the interest rates, massive bear run. We're back up to the origin again, and we've got no change on the interest rates coming. So the fact that we're up at the highs, and we're obviously in a very clear range at the moment, I suspect we'll get bullish price action if they don't change the rates. So if that happens, Aussie will weaken against New Zealand and it will start to come down. If the interest rates do rise on the New Zealand dollar, Aussie will come down against New Zealand dollar. So I think there's a good chance tomorrow morning when the interest rate announcement comes out that this will react at these highs. So just got to try and hold on and look for a retest of that propulsion move there. And then obviously see if we do manage to get a breakout. But obviously this thing is stuck fast at the moment. Totally range bound. We're stuck in this contracted range within the larger range at the moment. So there is a good chance that this may break out at some point, but probably want to pull back before it does that. That seems to be the limit to the movement at the moment. So I'd be happy short on that. Just waiting, really, for tomorrow morning. So you're not going to get any movement on that until we get the rates come out tomorrow. And then obviously the rate statement will indicate whether or not they're planning to increase interest rates further. Okay, no trade on the NASDAQ or the S&P at the moment. Still inside the opening range. Dow is double bottoming. They're rebuying that low, look. So yesterday's low really holding at the moment. However, if these guys break short, that'll probably help the Dow down. It looks like it's going to. Look at that NASDAQ. Railroad tracks. Total railroad tracks, look. 100% undone, the open. Market, no idea today. Just went long on the pullback on the NASDAQ. Whoops. And 2 weeks. 2 weeks? Joseph, you haven't watched the bootcamp, have you? You're obviously new to this channel. 2 weeks is a short trade. That's normal. There's nothing wrong with being in this position for 2 weeks. Called trading. ORB commentary reminds me of listening to cricket or golf? I can't remember what I was saying then, but I don't think it was anything to do with cricket or golf. We've just broken on the Dow. I've never listened to cricket or golf commentary because I don't watch either of those, so I wouldn't know. Okay, Dow's broken downside. So Dow Jones this afternoon, broken yesterday's low. So target would be previous day's low, which is well within reach of ADR. And TP2, I'm just going to move up into that propulsion, top of that propulsion gap. Just that low there. So if we can get TP hit there, that's 3R. So good break to the downside. Nothing on the S&P or the NASDAQ yet, although it looks like it wants to break it short. It's having a really good go at shorts, look. Still stuck inside that range though. Dow's doing well. Afternoon, Crom. So you can see a clear rejection to the upside on the NASDAQ there. So this is the Globex high today. Market selling those highs as soon as we hit them on the open. So good chance we'll get a break short today. We've got this little accumulation there, potentially, which could get in the way. But previous day's low, well within ADR. Need to get a little bit of momentum going, but seems to be struggling at the moment. Just running a test at the moment with a position trader EA on 15-minute time frame. Lot of drawdown, as you'd expect. Lot of drawdown. Done 75 tests so far. How many have we got profitable? 61. It's not bad, but a lot of drawdown. So lower time frame. I'm just testing lower time frames with the RSI2 strategy just to see if they are any good. It looks like they are, but some fairly decent profit over 4 years, but big drawdown. Not looking amazing, to be honest. Dow 2R. Nice clean break. 15 minutes until Powell speaks. Just taking one of those Dow off. So just over 2R on the first position, second position at break even. And we'll target, I'll still target that propulsion gap to the downside, just shy of ADR. It's got a lot of momentum this afternoon, the Dow, but the other two indices are struggling at the moment to break, which I'm just worried that this is going to run out of steam. These two can't seem to get any traction, so I'm just wary of it pulling back before Powell speaks. Afternoon, isn't it? So yeah, we'll see what happens with that, but not a lot happening. So we're not out the opening range yet on the S&P or the NASDAQ. Totally stuck. I think what I might do, I'm just going to close the orders on the S&P and just let the Dow run, basically. So nice clean break there. What I'm worried about is these two getting whipsawed together and hedged, which would ruin my profit for the day. So I've got 500 profit running or 450 profit running. If one of these hedges, it's going to cost about 300, 400 to hedge it. So I don't really want to trade both of them this afternoon because they are not able to break out so far. And I do not want them whipsawing into hedges, both of them. One of them, fine, because that pays for the other. But I don't want to make a lost day. So just taking that half off there. Go for the run to the downside. And I think we're going to wait, it looks like, for Powell to speak today. So no movement until Powell comes out and speaks. So keep your eyes peeled on financial juice this afternoon. When Powell testifies, basically we'll get he'll get quizzed basically by the committee. So he reads out a statement and then the committee will ask questions basically, and that is when we get a lot of the juicy information. So the statement typically is fact-based on CPI, unemployment, etc. Unusual for something to come out in that is unexpected, but when he gets quizzed about what he thinks is going to be happening, that is when we tend to find out what there's possible forward guidance is going to be for the Fed. So it's the second half of the speech basically where we tend to get some decent information. Today is the big one because most of the important points that want to be asked are asked today. Tomorrow, less so, because obviously they've gone through a lot of it today. So between sort of 3 and 4 o'clock, at any moment, you can suddenly get a spike in the US dollar and we're off. So just keep that in mind this afternoon. Just seeing what I can bank. Two positions on there. I had a power cut. I discovered something new actually this week. So if any of you have got a VPS of your own and have it set to auto start your terminals, as I had, when you do that, it auto starts a terminal kind of in the background, and then but it doesn't seem to launch MT4. Then when you launch MT4, there's two instances of your terminal running for some reason, and it duplicated a load of my orders. So I had a power cut basically, terminals all shut down. When it came back on again, it auto booted into MT4, but MT4 didn't seem to open. And I noticed that every single trade that got taken was duplicated. So I'm not quite sure what happened there. I've turned off auto boot basically. I thought I was being clever, making sure that if there's a power cut, it would automatically reboot MT4, but it seems to have had a negative effect. But yeah, so just bear that in mind. So I've got a couple of additional positions on first positions, which I didn't really want to have. And I didn't actually notice them until a day after they'd actually been triggered, the orders. So you can see actually there, look, Aussie US, I've got Euro US, there's two positions at the same there, and Pound US, there's two positions the same there. So on 3 brand new trades that were taken on when I had the power cut, which was last Wednesday, Wednesday power cut, it screwed up my initial entries, and obviously the additional entries that have gone in with single orders, as it should do. So I'm a little bit more in the hole than I should be at the minute on these. Just glitch in the matrix basically, but I've got some stuff to bank. I'm just wary about banking before Powell. Not really enough to bank. US dollar seems to be dropping pre-Powell speech. I'm just going to let that lot run today. Yeah, nothing to bank at the moment. What size account am I trading indices? At the moment, I'm trading about 40-ish. But cautiously. It's one of the reasons I'm shutting one of these down. The hedge days are really hurting at the moment when we get hedged. And I'm letting them all run, basically, and locking hedges in rather than trying to get clever with them. But it's doing very well at the moment, the strategy, but it's struggled this year, really struggled this year. For quite a few months, we've had very, very, very tight opens. So, but nothing we can do. Yeah, there was something I was going to cover this afternoon. I'll cover that in a sec. Let me just catch up on the chat. Happened to me too. Restarted it manually, and after that, it opened 2 positions at once. Pass. Don't know what that was. Afternoon, Pot DJ. So, just wanted to quickly cover my RSI2 strategy with the position trader EA. The settings that I've decided to go with. So, all my for those of you that don't know, I've been back testing the position trader EA with the RSI2 strategy using the 4-hour time frame. So what we've been doing is basically running a test on every pair, every currency, and testing RSI2 on the daily time frame using 4-hour entry as a time frame. So daily RSI2 extended beyond 90 and 10. 4-hour entry as soon as we get across above the 2 moving average. So basically a bull move or a bear move, regardless, intraday. So I've run just over 2,000 tests on every currency pair. None of the Swiss franc pairs, which is here. You can't quite see it, but there you go, down the bottom there. So none of these Swiss franc pairs really have a good profit return on drawdown. Yeah. Euro Swiss is okay. Mediocre pound Swiss. New Zealand Swiss is okay. And US dollar Swiss is terrible. So CAD Swiss, also terrible. So basically the upshot of the Swiss pairs is they do make money, but not enough to warrant the drawdown. The drawdown on the Swiss franc pairs is far too high. It's massive compared to all the other currencies. So I've decided not to trade the Swissy. I haven't even tested the yen, just doesn't work. Aussie New Zealand, also very, very bad performer. So I've tested pre-COVID and post-COVID. 2 separate tests have been run. So I'm missing out basically January to May in 2020. So that was a couple of months before COVID, and a couple of months after COVID. So that whole period there is completely volatile, absolute mess. It did survive fine, but I wanted to take that out of the equation because it's not accurate. So it's something that shouldn't really happen again. We will be more prepared, hopefully, for COVID, but it did survive it. So, but I wanted to take it out of the equation so I could see the difference between trading pre-market and pre-COVID and post-COVID. So the settings I've decided to run are drawdown control starting at 1.5%. So I'm risking 1% per trade. Drawdown control starting at 1.5%. Targets percent, regardless of how many positions you're on. So just looking for 0.5% profit all the time. So it's a negative return on drawdown ratio. Adding positions 0.75 ADR apart. So if market pushes down, RSI2 gets extended, we get in long, it needs to move down 3/4 of an ADR before it will look at taking a second position. Obviously, our stop losses are at 1.5 ADR. So if it pushes down even further, that one stops out. And then we take another position long. Yeah. Lot multiplier, 1. No lot multiplication at all. So we're literally getting in with exactly the same risk every time, not trying to get aggressive. Lot multiplication doesn't actually have too much impact on profitability or drawdown. Yeah, because we are capping our upside at 0.5% basically. So it doesn't really make a lot of difference. You get more trades because you get out of your trades faster. That's all. So those are the settings that I've settled on, and they work very well. Well, they work across all pairs. Yeah. So basically, I'm not curve fitting. I've picked exactly the same settings on every single Forex pair. Some will work better than others, but I haven't picked the best. I haven't picked the worst. I've picked something from the middle, something that returns fairly low drawdown and okay profit, basically. So a decent return on drawdown. So these are the results for all of the FX pairs tested. And this is including the Swiss. So let me just get rid of the Swiss out of here because I'm not trading the Swiss. Make a portfolio. And I'll show you the equity curve. So this is a 4-year period. So this is running from May 2020 to May 2024. So it's 4 years, all post-COVID. It generated 179k in profit. So this was working on the basis of a 50k account. Yeah. So the 50k account, it's basically made 179k profit. So just short of 4x return. So every single pair profitable. Some more than others, obviously, as you'd expect. It's not going to work the same on every pair because obviously we're not curve fitting. We're just picking pairs and we're just going all of you roughly the same. Drawdown was 22k, which is 11%. So the total drawdown on the account was 11%. And obviously the profitability is 179k. Month on month, it is making, can't really see this very well, but it's made profit every single year, ranging from 10 grand in 2020, much more volatile year because obviously we were post-COVID and there was a massive run up on the S&P. And we got 4 months missing there. So it made 32k in 2021, 43k in 2022, 61k 2023, and first half of 24 it's made 31k. So there will be losing months in there. So probably going to be somewhere between 40 to 60k profit. And it has multiple losing months. So every single year there were 3 losing months. So it's going to lose, obviously, because as all strategies, it's a mean reversion strategy. Works very well in nice clean trends, works very well in ranges. But if you get the market flying off into a parabolic trend, it's not going to work. So these, and as we know, the market spends roughly 20 to 30% of its life trending, and the rest of the time, 70 to 80% of the time, it is range bound. So as you would expect, 70 to 80% of the months are profitable. Yeah, 30% of the months are losses because the market will trend 30% of the time. So very good return on drawdown. Average yearly return is about 32%. So if you equate that, you're looking somewhere between 4 to 5% a month, which is not bad, not great, but not bad. And obviously we're trading daily time frame here. Yeah. So don't forget what I generate normally is somewhere between 10 to 15% a month trading the hourly time frame. when you're going up to the daily time frame, obviously you're taking a hell of a lot less trades. So obviously you could improve the profitability by increasing the risk, but obviously you're going to increase your drawdown. So it depends on your risk appetite at the end of the day. But that's the equity chart. Let me just get rid of portfolio. So you can see basically in the background here, this grey line is the S&P 500, and down here you've got ADR basically. So you can see ADR averages here. So we've tested it over a period where ADR was going up, going down, going up, going down, going up, going down. We've tested it in a very high ADR, highly volatile period, which was the bear market. And then we've pulled back down and we've gone into a more contracted ADR, which is the current market, which is bull calm. And it's worked very well in the whole thing. And the blue line is obviously the equity curve. So the only blip is, let me turn the years on. So you had about a 2-month period, roughly 2.5 months, where it stagnated, didn't make profit. And those were the losing months, basically. You had a big drawdown there in March 2022. If anybody remembers what happened in March 2022? We started increasing interest rates. Yeah. So this was the start of the interest rate rally. Yeah. S&P collapsed. We went into a bear volatile market. Banks and institutions, or banks, reacted by increasing interest rates, which took the volatility high. And at that point, we had a massive run because all of a sudden everyone went, we got to change interest rates. So the market was caught offside. We got massive parabolic trends for a little bit, which is that drawdown, which is 11%. There's your 11% drawdown. It's that period there. So the rest of the time, your drawdown will be, as you can see, I don't know if you can see, but I can't really draw a line. That is 10% drawdown. That is 5% drawdown. Really difficult to draw. But as you can see, most of the time, especially since the interest rate rally stopped, we haven't hit 5% drawdown. So since the middle of 2022, the strategy portfolio hasn't even hit 5% drawdown. But it's had 2 spikes at roughly 10% and a few spikes at 5% for quite a while we were recovering from COVID. Yeah. So as AZ has just said, this is compounding. Yeah. So this is not withdrawing profits. Yeah. So this is just the profit curve working on a 1% risk. Yeah. So obviously, as your account grows, your risk grows and your rewards grow. Yeah. So it is compounding the account. Yeah. So if you're going to be withdrawing funds, obviously, you're not going to get such a nice equity curve. Your equity curve is going to be like that, and the profitability is going to be a little bit lower. So, but having said that, there are ways to get around that. So when you withdraw funds, you can note down what the previous balance was and increase your risk after the withdrawal so that it is simulating what it would have been. The danger with that is your account is going to go into a lot more drawdown than you would expect it to. So it's unlikely we're going to get something like that happen again, because don't forget, this period here post-COVID is us completely unexpected, caught off guard. What the hell? This is the largest ever bear rally we've had ever. Yeah. So the market has never experienced a bear run of this magnitude, a bear volatile market like this. So for the strategy to survive with an 11% drawdown for a period of like 3 weeks at the start of the interest rate rally, at the beginning of the bear run, is bloody good. Yeah, it survived that. And since then, it's had no problems. And prior to that, it's had no problems. Yeah. So period of stagnation on it is very small as well. So stagnation is running there for, it's basically 3 months where you had stagnation, which is the start of here. So the stagnation period at 2022, we had a profitable month in May, we had a losing June and a losing July, and then we had a profitable August. So if you top that, and that up, you come out plus about $1,000, which is fine. So over those 4 months, it stagnated. Over those months, which is the COVID period, it actually did all right. But I've decided to leave them out because I wanted a level playing field. Because while it's not fair to test over COVID, because it might have a negative impact, if you're going to say that, this strategy actually had a positive return over that period. But again, shouldn't include it, because if you're not going to include it if it goes wrong, you shouldn't include it if it goes right. So we're taking this out because it's an outlier event. So it's not normal. That March, obviously, when we locked down, prior to that, we had a weird market. Post that, we had a weird market. Then the market got back to normal. Then the bear market started. So in 2022. So, yeah, so it's looking very good. I've also done a test like this on some other set files. So I've run a 1.25 multiplier. I've run an ADR distance of 0.5 and I've run an ADR distance of 1. And I've left the targets at 0.5 all the same and drawdown trigger the same at 1.5. So I've tested other variations of it to see what the equity curve is like, because there's nothing like actually seeing the profit curve. It just hammers home what you should expect. You should expect periods of 2 or 3 months where you're not making money. You should expect periods where you're going to have a big drawdown, and you should expect periods where you're just going to look at it and go, "This is the holy grail." Yeah, but overall, it's profitable over. And the important takeaway from this is it is profitable in all market regimes. It's profitable in a bear volatile market. It's profitable in a bull calm market, and it's profitable in a bull volatile market. 3 market regimes. So it's great. It works all the time. So this is what I think I'm going to run as a set file. I'm going to run it for 3 months with reduced risk to basically make sure there's not something weird happening. So I want to forward test it with reduced risk. We've got some volatility coming in on the US dollar. Powell said something. Policy rate cut is not appropriate until the Fed gains greater confidence inflation is headed sustainably towards 2%. So that's bullish US. Elevated inflation is not the only risk we face. More good data would strengthen our confidence on inflation. We have more considerable progress towards a 2% inflation goal. Recent monthly readings show modest further progress. So it's referring basically to the fact that US dollar inflation there is coming down, but it's coming down at 0.1%. Yeah, which is not really doing anything, is it? Yeah, if you look at some of the other currencies like New Zealand dollar coming down at 0.7, we came down at 0.9. Now we're coming down at 0.3. They're really struggling to get this number anywhere near 2%, which means US dollar, no interest rate changes. And if that bounces, possibility of a rise. So we had last week some idiot saying the swaps are factoring 2 interest rate drops this year. Not going to happen. And Powell just confirming that basically. So bullish US, but it is short-term bullish US. Yeah, it's nothing we don't know already. So he hasn't said anything there that is like, holy crap, we didn't know that. As you can see, US dollar CAD gone nowhere. So this doesn't mean anything at the moment, but we'll wait until he gets questioned. So yeah, so that's basically the results of the RSI2 testing. And it looks pretty good. The volume here indicates that there are very few outliers. So these spikes above are outliers, which is where you would have got 3 positions on instead of 2 positions, because bear in mind, we are scaling in with this strategy 0.75 ADR apart, and we're taking our risk off at 1.5 ADR, 1.5%, 1.5 ADR. So you'll get the odd anomaly, probably to do with things like gaps and stuff, where you'll get a little bit more lot size than normal. But you can see there that lot sizing is stable, showing that we've got either 1 or 2 positions on. And obviously, as ADR fluctuates up and down, you're going to get different lot sizing. So this proves that there are no anomalies in the test. This proves it works in all market regimes. And this proves that there are drawdown outliers 2 times in 4 years, which is going to happen. So yeah, all looking good. Very, 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 very robust strategy. But it's not going to set the world on fire. Yeah, this, as all strategies that work are like this. Yeah, it's not going to generate a million. All these strategies you see, I turned 10,000 into a million. Not going to happen. Not without some ridiculous risk or some massive curve fit. So this is normal, proper risk-based trading. Yeah, we're using risk, we're using stops, we're going for short positions, making money. So that's what it's all about. So obviously, this is going to be account size related. If you start with a 200K account, you're going to 4x that. Yeah, so you'd be generating somewhere in the region of 700 grand in 4 years. If you're starting off with a 10K account, you can divide that by 5. Yeah. So, but yeah, all looking good. I've checked through the trades as much as I can. I can't see any outliers in there. It's all pretty standard stuff. Banking $250, 0.25%. Twice on 2 trades, 0.5%. Yeah. Risk. Your losses are capped at roughly $1,000 max, which is about right. So there's nothing here. There's the odd one there, one which is 1268, which would be a gap down or gap up scenario, which is going to happen in real life. So I can't find any anomalies in the testing either, which is good. So it all looks pretty good. So the set file, I will post in Telegram and Discord. This is for MT4. And I'll probably post the results as well. I'll post some screenshots of the results and probably link to this video because this is obviously talked about it. I was just going to say, I bet I've just been screwed by Powell. Yeah, I have. Okay, I'm just going to close that Dow out. So 570 banked on the Dow. Hedge is locked in at 306, so it's $270 profit, pounds. Keep forgetting this is a pound account. So yeah, so locked in 270 today. And I'm actually, that didn't hedge. So you would have gone long on the S&P if you were trading that. You wouldn't have got triggered short. You were triggered long only, and it hasn't broken short. So if that breaks long and we get a drop, i.e. basically if we get a drop in the US dollar, these will both break long. So that one's hedged though. So hedge targets on the NASDAQ. I mean, upside, there is no upside because we're at new highs. So actually, are we at new highs? So yeah, upside on the NASDAQ. I'm going to leave everything 5R at the moment because if Powell says something stupid, we will get ADR very easily, won't we? So I'm just going to leave it as it is for the moment. I'd rather lock the hedge in and take that loss and take it off the winnings than try and be clever today. Right. Bogdan, VPS, yeah. Amy, afternoon. These results, 150K compound, yeah. Can we get a set file for your inputs? Yeah, I'll post it in Telegram and Discord. Wonder if Powell Dow will summon the power of the walking stick today. I don't think I saved Powell Dow. Need to save Powell Dow. Palgalf. Yeah, we'll see. Could be a tricky one today, I think. You're going to put this in set file in Discord, yeah. What's the 4-hour entry time frame? Yeah, so basically you're trading the 4-hour. I'll run it. I'll show you. I can't because I'm testing. Do I even think this test is going to work? Is it worth continuing to run it? Drawdown's far too high. So drawdown on this test is ranging from up to 83%, starting at the outliers are 9 and 11%. Too crap. It's not going to work. So the set file is this one. July, that one. So this is the set file. And it runs on H4. So basically it's using daily RSI 2, 90-10 is the entry triggers. It's the entry signal is a simple moving average 2 on the close. Target is 0.5%, regardless of whether there's 1, 2, 3. Well, there shouldn't be more than that positions on. You're getting out at 1.5% drawdown with the whole account. We are not using a lot multiplier. We're scaling entries 3/4 of an ADR apart, and we're using 1% risk. Yeah. I didn't put it in visual mode. Oh. Again. Slow down. So I'll move this to a 2 SMA. So you can see basically that is the moving average that I'm using. So basically a 2 moving average is taking the average price of the 2 candles. So what I'm saying is if the RSI is extended, yeah, and we get a bull candle, yeah, trade. So it's basically saying, there you go. So RSI 2 is low. As soon as you get a bull candle, i.e. a candle that opens below the 2 moving average and closes above the 2 moving average, it's got to be a bull candle because price has gone up. Take a trade. Yeah. So this one will take, see now RSI 2 is not extended. So basically that's basically all it's doing, as you can see. So there you go. Look, we had a push up. RSI was extended to the upside. We had a bear candle. It opened above the 2. It closed below the 2. We take the trade. We get out with 0.5%. 4, 8, 12, 16 hours intraday. So that's basically what it's doing. So you can see the trades plotted there. So there was an entry there. There was an additional entry there. Exit there, 0.5%. Single entry, exit. Single entry, exit. Single entry, exit. Single entry, exit. So there goes some drawdown there, look. Be interesting to run this and see what the strike rate was. So strike rate, all trades 77%. Bearing in mind we're running a negative R. Yeah, we're using 1.5% loss and 0.5% profit with multiple positions. 2.14 profit factor, 24 grand profit on the pound US. probably have a very similar result on the Euro US, I'd imagine. We'll run it. So there's a bit of drawdown there at the start there. And then, so this period here, which you can't see because it's behind my head now, but that period there, which you're still not going to be able to see because it's still going to be behind my head probably. Yeah, you can't see it because it's always going to be behind my head. Doesn't matter where I put that, does it? But yeah, so there's a little bit of drawdown at the start. Yeah, and these are basically where we're getting market rallying for multiple days in a row. Yeah, so you're getting down day, down day, down day, tiny pullback, down day, down day, down day, which we would class as a squeeze. Eventually, it will pull back and you'll exit that squeeze. Then you start again, you wait for the next push. So exactly the same as what we do day in, day out. It's just using the daily time frame, 73% strike rate. Again, 21 grand profit. Let's do Aussie. Let's do something that's not US based. Pound odd. Pound odd wasn't particularly good, I don't think, from memory. So pound odd not quite as good at the start. Drawn down by about 4K. Australian dollar does squeeze quite hard at times. But obviously it spends an awful lot of time as well because it's a commodity pair when the oil's not moving, doing that. Ranges. So obviously during those periods, it works very well. See, that only produced about 6 grand profit. Not fantastic, is it? Didn't take anywhere near as many trades, but the strike rate is still the same, 71%. So it's very, very similar results on all the tests, which is obviously what you're going to get in that portfolio. So there you go, pound odd, 5.5 grand. And then we got the Euro US there, 21 grand, the pound US 24, which are those 3 tests we just thin. That's those 3 tests there. So looking good. Did you test the 1 hour time frame with the higher drawdown? I did a lot of testing on the hourly. I don't know what you mean by higher drawdown though. No. The 1 hour time frame. The problem with the 1 hour time frame, if you think about it, you got in a 4 hour candlestick, you've got 4 price moves. So the market can push up, push down, push up, push down, and go absolutely nowhere in 4 hours. But you will get 2 signals long and 2 signals short. In a 4 hour candlestick, it can push down, 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 push up, 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 and there's no signal. So the 4 hour gets you into less whips or moves, meaning that if the market is pushing down and then it pushes up, you don't get triggered into these trades that you shouldn't be in as it continues. So it just seems the 4 hour time frame was much lower drawdown, basically, which is what I was looking for. I'm looking for drawdown. So the drawdown on the 4 hour time frame was in the lower percentages, in the 5s to 10s, whereas on the hourly, it was a lot higher. It wasn't quite as good. That test includes yens? No, no yens. Look at the yen. I'll test the yen pair for you now. Doesn't work. Just doesn't work. Let's do Aussie yen. What's this graph? He says, having not ever tested this, I've never tested it, but It doesn't make a massive loss. Don't get me wrong. It doesn't blow accounts. It won't blow your account, but it won't make profit. It doesn't generate alpha. Because it goes into parabolic moves for multiple days in a row. Yeah. So what you end up with, so that's made a loss there of $3,500 in 4 years. It's nothing, is it? It doesn't really matter. But look at these drops behind my head. Let me turn me off for a minute. So these are basically parabolic multi-day moves. Yeah. And then it going into a range for days. And then a parabolic multi-day move. Then it going into a range for days. Then a parabolic multi-day move. These parabolic multi-day moves that you get on the yens when it goes into these big, strong trends kill the strategy. It doesn't work. But it doesn't make a massive loss. It always will recover them. But because it trends more than the other currencies, you have more losses than the other currencies. So there's no point in including them in the portfolio, because all it's going to do is those really good months will have been tarred by bad months. But if you have a good month on the yen like that, you're going to have a great month. But then you'll be disappointed the month after. So my conclusion was just remove them. So I tested these on the hourlies and I tested them on the dailies. I have never tested them on this is the first time I'm testing them. I just didn't bother testing them at all on the 4-hour time frame. So I'm expecting the results to be the same as the hourly and the daily. You watch this now scream up and completely prove me wrong. But yeah, I just couldn't get it working. So I decided not to bother testing because it speeded up my testing. There you go. So just these big runs you get on big trends. That's the only time the strategy fails, on strong trends, which we know is 20 to 30% of the year. So this is where the edge is. Our edge is 70% to 80%, which is why our strike rate is 73% on average, because the market spends most of its time either range bound or in market structure. When it goes trend, we don't win. And at that point, you go, I'm not going to do that anymore. But you don't know when it's going to do that, so you can't. You have to just go through it and take those losses. That's what it's all about. If you start the strategy today and we go in a trend for 2 months, you will turn the strategy off before it makes that massive profit, because you will just witness it making hemorrhaging cash. And it won't do it forever. You have to know what it's trending. That's why it's hemorrhaging cash. The tests show this. Yeah. Very clear in the equity chart. When the market is trending. Probably a little parabolic trend there. Ranging a little bit, ranging. Yeah. But if you start there, this is what system hopping is, isn't it? Oh, this strategy looks amazing. I'm going to run it. Please give me the set file. 3 weeks, solid losses. You'll system hop. You'll go, nah, scrap that. It's crap. It's not crap. It just has drawdown like everybody. Just got to sit through it. This proves it. If you expect it to come, if you sit there and go, I know full well that I will be drawing down 10 grand. So if I stick 50 grand in account today and start trading this, if in 2 months' time I'm sitting on 45 grand, that's within parameters. I'm expecting it. If you expect it to suddenly do an equity curve that goes up and you have a profitable month in month 1, if that's what you're expecting and it doesn't happen, you're going to scrap the SAS strategy. This is why backtesting is so important. You need to make sure there's no outliers. You need to make sure it works in all conditions. You need to be aware of what's going to happen. We should be expecting a 10% drawdown on account. In fact, I don't think it'll happen because that was an outlier. If you look at it, it's only happened twice in 4 years. So for 2 years, that whole year, we never drew down more than 6%. This year, last year, and so far this year, we haven't drawn down more than 5%. In fact, 4%. So somewhere between 4 to 6%, 5% is average. That's what you should expect. Have you tried the RSI2 strategy on indices for longs only? No. Haven't tested it on that yet. I mean, it works. I know it works. It definitely works. But that's a different kettle of fish altogether. It's a different thing. And you know, the problem you're going to find with that is, yes, it'll work fine, but what you're going to end up with is one of these. You're only going to end up with one of those. Yeah? Look how many I've got. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 of them. If I add the S&P into my portfolio, brilliant. I've got 15. But it's not, the S&P version of this is not going to make 10 times this. It's just going to be profitable like everything else. So you can use a moving average. Yeah, without the yen and Swiss, yeah. But let me show you the Swiss. Just out of interest, yeah. So this is the Swiss franc portfolio. Yeah, it made 36 grand. 37 grand. But look, positive 8.5 Aussie Swiss, negative just 1k for the CAD Swiss. Euro Swiss made 9.5. Pound Swiss made 9. New Zealand Swiss made 14.8. US dollar Swiss lost 4.2. So, but look at what it does on a month by month. And this is the bit that I don't like. You've got a run there of 4 months solid where it lost money. And you've got lots of months where it just about made a grand, just about made a grand, just about made 2 grand, made a 10 grand loss. The Swiss franc went on one of its parabolic runs. It doesn't just make a loss, it makes a massive loss. The losses are 6 grand, 9 grand, 10 grand, 4 grand. These are the big squeezes on the Swiss. Look at the profit curve. Yeah. Stagnation. Look at that. What's the Swiss franc been doing? It's just, you know, it's just not worth the, yes, it'll make money, but look at that, 20%. That's 20%, that bottom line there. Roughly 20% drawdown on account. It's too big. Far too big. Not worth it. Did really well in the collapse, look, because what were we doing when the S&P, when the stock market was collapsing? What were we doing? Pulling our money out of stocks. Where do we put money when stock markets collapse? Safe haven currencies. What's the Swiss franc? Safe haven currency. What happened during the big bear market? Swiss franc went nuts. It made a load of money because we were pulling money out of stocks, putting it into the Swiss, pulling money out of stocks, putting it into the Swiss. The Swiss franc was going like that, but moving up all the time. Beautiful market structure. Made a fortune. Very low drawdown. So if the stock market collapses for any reason, run this strategy. Great. But when the stock market is rallying, like now, making all-time highs, terrible. And also the Swiss have decided to change their interest rates without telling us. But we know all about that. That's what they do. So yeah, it's good. It works. But not worth it for me. You should clip this part of the stream for all the people that ask. Yeah, could do. Yeah, I might do that. Can you explain how that risk means that the EA is closing out only the first trade in the position when it gets to 1.5, as opposed to the whole position? Yeah. So that's how the position trader EA works, doesn't it? So in the position trader EA, drawdown control is done per trade, not per position. So if you've got 5 trades in a position, yeah, drawdown control works when an individual trade reaches a percentage drawdown on your account. So when the market pushes down through these trades, when it gets to 1.5%, it closes that. These don't get closed, they don't get touched. When it gets further down, that one will get knocked off. When it pushes back up, all 3 of those close out at profit target, which in this case is 0.5%. So we take a 3% loss in a squeeze, and we bank, in this case, 1.5%. So it's a negative 1.5. But you wouldn't have 5 positions on, because you're spacing at 0.75, which means that you can't have more than 3 positions. The odd anomaly you might get 3 positions on, but other than that, because you're closing out at 1.5% and you're risking 1%, when it's moved 1.5%, 1.5 ADR, 2 of those, you should never really have more than 2 positions on. You can change that, obviously. If you went to 0.5 as your scaling distance, you can certainly have more positions on. And if you look in the spreadsheet, let me just use this one as an example. Whoops. And if I include the 0.5s, yeah, still makes a profit. But look at the drawdown. The drawdown jumps up into double figures because you're in the losses, you're taking more positions in a loss. Therefore, you're making more loss. In the winning trades, you're still making 0.5%. But in the losing trades, you're losing more money. So your drawdown is higher. But you will also have more profit because you're going to have trades in profit more as well. So it's a double-edged sword. But drawdown is the key to this. Yeah, if you're running 15 Forex pairs, for example, and you've got a 10% drawdown, there's a potential for 150% of your account to disappear. It's not going to happen. We've backtested it. But you can't, the higher this number is, the more problem you're going to have with things like leverage and psychology. So you want to keep the drawdown as low as possible. In a beautiful short on the NASDAQ at the moment. Cool. I'm hedged. Yeah, I'll see how far it goes today. US dollar's probably rallying, isn't it? Yeah. So we've got a bit of strength coming, not a lot, a bit of strength coming through in the US at the moment. If you don't trade the Swiss and yen and increase the risk on everything else, is that basically the holy grail? That's that. That is not trading the Swiss and the yen. No, it's not the holy grail, is it? I mean, everything squeezes. Everything squeezes. The US dollar squeezes. The pound will squeeze. Everything will squeeze at some point. But they squeeze a lot less, a lot longer. It's just a lot less. A lot less. So not the holy grail by any means, you know, but it's just robust. It's a robust strategy. The same as the position trading strategy that I trade every day. It's robust long term. It's just, it doesn't fit all market conditions. You're never going to get that. But, you know, you can see by this, the stagnation on this is 231 days. So, you know, you can't use this to pay the bills. It's, it hasn't made money since the end of 2023 if you traded the Swiss franc. Only the Swiss franc, obviously. But, you know, this is the thing. So if you take that chart there from 2023 and look at that drawdown, and then you look at the other portfolio. Yeah. So your Swiss would have drawn down that much. Your other pairs have run up by that much. And this is what I mean. If you put the Swiss in there, at times, you're going to take a beautiful, profitable strategy and turn it break even, which at the end of the day, it's not the worst thing that can happen, is it? Not losing money, but that's not what we're here for. We're here to make money. So it ran up more than it drew down on the Swiss, but marginally. So, you know, it's not, you know, when you look at the two strategies, the two with the Swiss in and Swiss out, overall, you're going to make roughly 40 grand more, 10 grand a month on a 50K account to include the Swiss. But your drawdown is going to be more hell. I'd much rather have less hell, less sleepless nights, and make a little bit less money, personally. But go and do all this testing yourself. You can test all of this. Test it. See what happens. See, everybody's different comfort levels. You know, if you up that risk, yeah, you suddenly, if you up the risk to 2% and target 1% and get in 0.5% apart and run the same test on the pound US dollar that made 24 grand, you're going to make more money. the equity curve is going to be nicer. Well, not nicer. It's just going to be pretty similar equity curve. It's just going to be more profitable. But your drawdown is going to be more uncomfortable. Somebody was saying earlier about, just trading one currency. Yeah. Trading one currency and upping the risk. You can do that. So you could say, I'm just going to trade the pound US dollar for US and pound exposure. I'm just going to trade the euro CAD for euro and CAD exposure. I'm just going to trade the Aussie dollar. No, probably New Zealand dollar, US dollar maybe, for Australasian exposure. What am I missing? That covers it pretty much, doesn't it? CAD, odd, US, etc., etc. So there's your graph. There's your equity curve. Instead of making 24 grand profit, you've made 36 grand profit. Your strike rate is 75%, a little bit higher, but your drawdown is now up to 10%. That's even better. You see, this is the thing. This is the quandary I have had, right, in deciding what to do with this strategy. Yeah, there are 1,900 variations of this strategy out of 2,160 runs that are profitable. Some of them make 10 grand more than others. Some of them may have a drawdown of 7 and some have a drawdown of 10. Which one do you prefer, 10 or 7% drawdown? If you don't care about 10, you can get an extra 10 grand out of it. Sometimes, maybe, in the past. What the future will hold, we haven't got a clue. But this is the problem with this strategy. When you find a strategy as robust as this, trying to pick what to do with it is the hardest part. I've got 2,000 variations. What do I pick? This is why I've just picked one that I thought looked good on everything. This is filtered to show only 1.5 to 2, only 0.75 and 1, and only 1 and 1.25 to show me how many of those are profitable. So I did that and thought, well, sometimes I might get in with a little bit more. Sometimes I might get in a little bit further away. Sometimes I might let it run a little bit further. So what should I target? Doesn't matter. It all produces profit. And that test I've just run there made 8 grand a drawdown, so 10% a drawdown, but made an extra $14,000. And all I've done is double the risk from 1 to 2, double the profit from 0.5 to 1, and get in 0.25 ADR closer together. Now, a lot of the times, the trades there with that setting and the trades with 0.75 ADR will take trades in exactly the same spot because it's got to open below half an ADR or 3/4 of an ADR and close above a moving average. So that entry there will be very much the same on those two a lot of the time. There'll be a lot of confluence. The difference is we're just doubling our risk. Therefore, we make 50% more profit. Yeah, but, let's run it on the Euro US. That made 21, didn't it? Well, that one does. Yeah, so, you can pick any settings you like. If you're only going to run 4 or 6 pairs, 10% drawdown is not an issue. They're not all going to draw down at the same time, remember? Yeah, if you look at the portfolio analysis, and if we look at sub-equities only, which is individual currency pairs, you'll find, look, that drew down massively while that was running up into beautiful profit. That was drawing down, that was making profit, that was making profit. Those 3 or 4 currencies were all drawing down at the same time while these were generating nice profit. Because what this will be is this US dollar, for example, is on a squeeze. You'll have all the US dollar pairs making losses at the same time. All the pound, the euro, the New Zealand and the Aussie pairs will all be making money because the US dollar is being manipulated. Therefore, these guys would just be moving around normally because you'll find that only one currency usually gets squeezed at a time. So while one is losing, the others are winning. So you're never going to get into drawdown on everything. If you're keeping exposure tight, you're never going to get into drawdown on everything at the same time. So there you go. Equity is still the same. So this one made 24 grand. Previously, it made 21. So making those changes in the settings. Did I run that on the change settings? Yes. Just making sure. So we got 74% strike rate. 11 grand a drawdown, which is 21%. Much bigger drawdown. Didn't make any more money. But we did. We made 3 grand extra. But we took a lot more drawdown. Horses for courses. Still makes money, doesn't it? Still makes money. But it's probably less comfortable to trade. Again, I don't know what the best is. I can't make that decision because they're all good. They all, you know, this is the trouble, isn't it? When you've got something that works all the time, what do? Whatever. Doesn't matter, does it? You could even close it at end of day. So if it's in profit end of day, shut it. Don't go for the 0.5% or run it for the 1%. Yeah. So increase your profit target. Another thing you can do. Look. So let's go in on a single trade. Let's use 1%, which is a half R. And let's go for 2. If we get multiple trades on, let's go for a 2% profit. See what impact that has. So if we get into more than one position, let's just let it run a bit farther. See what that does to the equity curve. Bigger drawdown point there. But as you'd expect, letting winners run looks like a lot more profit. Okay, so we made 35 grand instead of 24. Drawdown was 20%, the same. Strike rate 73. So if you target a 0.5 to 1 on a single trade and a 1 to 1 on a multiple trade, you generate roughly 50% more profit. But don't forget, this is the past. Don't know what's going to happen in the future. So, but you know, that's all reflected in the spreadsheets and the testing. So, but there you go. So that is the RSI2 strategy. So that's kind of it in a nutshell. And the testing and what I've decided to run. Whether it's right or wrong, I don't know. I've got some profit I can bank. Pounds dropping. Just the pound dropping. So I'm going to let that run. US dollar yen's rallying. Why did I get into that US dollar yen? Anyway. To be fair, if your max DD is 10% on the portfolio, you could double your risk. 20% for an 8% return is pretty good. Yeah, it doesn't always work that way though, AZ. Because in the loss periods, you're going to double your loss. Try it. It doesn't always work that way. It's not. If you were risking a fixed monetary amount with a fixed monetary loss over a fixed pit period, that would work. But because we're using ADR and percentages of account, it doesn't quite work that way, that you will double everything or 8x everything. It doesn't quite work out the same. It will be better, but not necessarily that. The thing you've got to bear in mind is as well, this is the past. Yeah, this is the past. I have no idea what's coming. Yeah. Russia just hit a hospital in Kiev yesterday. Is NATO going to respond or not? What's happening next? Are we going to go into chaos? Christ, I don't know. So this is now. If you use low risk, you will have low loss. If you massively maximize your risk, Russia shoot another missile into Kiev, it misses and lands in Poland, World War III is kicking off. If you've doubled your risk at the point of World War III kicking off, in the same way as you've done that in March 2020 when COVID happened and everyone locked down, If you doubled your risk at that point, you blew your account very quick. So you're better off being safe and making money than trying to squeeze. Somebody said this in Telegram earlier, didn't they? And I wasn't having a go. I think it was someone was in the live stream, wasn't it? Is it Bootcamp? I'm not having a go. Try stuff, yeah. But greed is the biggest killer in trading. Greed will kill everybody. When you think you found something that works, your initial instinct is to increase your risk to try and make more money. And that is invariably when you get hit the hardest, because it's harder to get back that money when you risk more. If you risk 2% of your account instead of 0.5% of your account, and you have 5 losing trades in a row, 10% of your account has just vanished. Your confidence is smashed. If you risked 0.5%, you're 2.5% down. 2 trades later, you've got it back, or 3 or 5 or whatever, however many it needs. But the drawdown is what makes everybody go tilt. Yeah, you can't see me. I'm gestating at the screen, doing things like this, and no one can see it. But yeah, it's those sorts of things that kill traders. So if you're going to increase your risk, you're going to need to reduce your number of pairs. The problem is, which of these is the one that's going to be the most profitable? So, for example, in this test period, the pound US dollar made 24k. That was the clear winner. The lowest profit was pound Australian dollar at 5.5 grand. If you pick that one and you don't trade that one because you're doubling your risk and reducing your exposure, your profitability is actually going to be lower, because you don't know which currency is going to perform the best over the next year, 2, 3, 4 years. So you're just better off trading everything and let the edge play out. I see Mr. Snotcoin is back. What? Mr. Snotcoin? What's Mr. Snotcoin? Oh my God. Not CEO. New coin drop. For those who don't know what the hell Brian's talking about, there's a spammer in the Telegram group. Should we send him a little message? Hi. You've got a good coin money making scheme there? Question mark. My emoji's ready. Hasn't read it. It's obviously a bot. Block. Annoy. Goodbye. I love doing it. I love it. Archive. There we go. Scammer gone. And give him the bam hammer. It annoys them more when you do things like that to them, because they can't talk back. So they get cross and then they can't respond to you, and it winds them up like mad. It's great. This reminds me of the old streams minus the jigsaw. Yeah. Making money. Right. So that's all I've got for you today. Got out almost perfect on that. Just half an hour basically on from where I got out of the position, which is good. I'm going to let this NASDAQ run today. So I'm up. It's hedged. I can't make any more loss on it. So either we get a big day and I'll get out once we're beyond ADR, either way, or it won't move anywhere and I'll just hedge that loss in, and that's fine. And FX wise, doesn't look like we're moving. Oh, we've got an ADR hit. Oh, crap. It's the yens. So Swiss yen is your first ADR of the day. Looks like money coming into the Swiss and coming out of the yen. Maybe not, actually. Not a lot of movement on the Swiss. It's all yen, look. So the yen basically being devalued again. I'm really, 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 really wishing I hadn't got in the US dollar yen. Nothing I can do about it. Looks like I'm going to have to use some of this profit to pay for that yen position. So yen is the only mover so far today. So rest of the day, Powell obviously is testifying. Yellen is talking now. Yeah, so is Powell. They're still talking. So we might have some more upsets coming in. But other than that, you're waiting for the New Zealand rate tomorrow and then Fed tomorrow evening. So I'll be on tomorrow morning at 7. So right? No, wait. I'll be on at 8. So yeah, 8 o'clock tomorrow, midweek analysis. So we'll go through all the FX pairs, have a look at how everything's going, and see where we go from there. All right. So anything you need, let me know in Telegram or Discord. I will post all this stuff in Discord and Telegram for the Position Trader EA, the set files and the testing. I'll download this video and see if I can crop it. I don't know how much I was waffling or how much crap I was talking or how much it didn't make sense. So I'll have to watch it. But if I can crop out all the information there and stick it into a video, I'll do that for the RSI2 strategy. I might add some bits and pieces into it, but I'll do that because I've basically gone through it, haven't I, today? So, all right, so have a good one. Anything you need, let me know. I'll be back in tomorrow morning at 8 o'clock. We'll see what else has happened and, go from there. And hopefully Powell doesn't drop any big ones. All right, have a good day. I'll see you guys next time.